season. Well, speaking about game consoles and the chips in them, semiconductor stocks are flying high this year as investors position themselves for an economic recovery. But can it last? Well, Paul Meeks is principal at Winsor Asset Management, joining us in South Carolina. And Paul has analyzed tech stocks for many years, including as a fund manager at Merrill Lynch. And Paul, good to have you back on our program.
It's always a pleasure.
Now, you say that some of these stocks, these semiconductor stocks, or most of them, have gotten ahead of themselves. Why?
Well, what's happened is the semiconductor industry within the technology sector is an early cyclical. So when you have any semblance of firming in the economy, these stocks soar. And if you take a look as a benchmark, the Philadelphia Semiconductor Index, it's almost doubled since it troughed in November of 2008. And the fundamentals are improved, yes, but I don't think they're improved enough to justify some of these prices. So my overall view, of course, there's always stock-by-stock exceptions, is that you underweight this industry within the technology sector.
So you're looking for a correction then, Paul. At what point do you think, or what could trigger perhaps that correction in these semiconductor stocks?
Well, I think we're through the trough of the business cycle. What's going to happen is folks might become disappointed when they see that the growth, even though there is going to be growth, is going to be less robust than they expected. That triggers a disappointment.
And would you say that the fact that we had pretty good earnings coming out from Texas Instruments and National Semi, both huge chip makers, beating expectations, TI saying that they see that they're forecasting better than expected revenue in the coming quarters, but the stocks didn't react that much to those earnings reports. Is that an indication to you, perhaps, that investors are also starting to feel that these stocks are getting top-ish?
That's an excellent point that you just raised, because when you see good news, and both Texas Instruments a few days ago and then National Semiconductor last night both handily beat the consensus estimate and gave at least as good as expected guidance. Yet in the case of Texas Instruments, the stock did about nothing, and National Semiconductor last night in after-hours trading actually dipped a bit. So I think that's an indication when you do not rally further on better-than-expected news that maybe the move is already in the stock.
And is there anything, though, Paul, that could come in the next few quarters that could show you that perhaps maybe you're wrong, perhaps the demand coming out from Asia, the demand going to the holiday season? I mean, are there any indications at all, though, that the demand there might be more than expected, and that, in fact, the levels do justify the prices that we're seeing?
Well, I think the key area where I could be wrong, because these are cyclical companies, is that business conditions, not just domestic but around the world, are better than I expect. That GDP growth is not a fraction higher than I expect, but something more impressive than that, then I could be wrong.
Okay. Last thing, holiday season, how's that going to affect some of the chip makers?
It typically has a pretty big effect, particularly when you take a look at the back-to-school selling season, and also what happens, as you mentioned before, with game consoles and other electronic devices. I think the next big driver, however, is going to be the next operating system released by Microsoft, and maybe that triggers a corporate PC upgrade.
Okay. All right, Paul. Thanks so much for talking with us about the semiconductor stocks. They've been really moving this week. Paul Meeks, principal at Winsor Asset Management in South Carolina.